There's further evidence to suggest that the Chinese economy is beginning to slow down. We've been talking a lot about China recently and their concerns about high prices within the mining sector and how it's dealing with all that. But at the same time, we've got a rise in lithium prices, an interesting auction going on at the moment in Australia about lithium. Let's put all this together and find out what it means and how to trade these markets. It's John Meyer from SP Angel. John, welcome. I think I would like, if I can, to kick off on this news from Australia about this auction for lithium, because I think this says all of what's going on at the moment, doesn't it? It's all centered around battery metals, I think. What is happening there, and why are these prices rising for lithium?
Well, Pilbara Minerals is auctioning shipments of lithium, and they're getting extraordinary prices being bid for this lithium, which tells us that the market is relatively tight. We kind of knew that already, but this tells us how much buyers are willing to really pay for shall we say, the marginal lithium that they're trying to get their hands on. So lots of battery factories ramping up production, and the supply chain that supplies the lithium, the nickel, the cobalt, the other materials that they need for those batteries are scrabbling around to try and get the raw materials to feed through the supply chain. So what we're seeing now is prices ramping up to levels that we hadn't really expected. So the latest auction price for 8,000 tons worth of spodumene concentrate or lithium concentrate is $2,240 a ton. And that's nearly double the last auction price, which again was a very high level, set a month ago. So it's quite exciting stuff if you're a lithium producer right now.
How's this going down in China? Because I said the Chinese authorities have tried to find ways of trying to reduce the cost of some of these raw materials, the metals and so forth. I know we've spoken about this before, and I know it's very difficult for any area of the market to try and beat the market at its own best practices in terms of pricing. We've seen retail sales today far weaker than had been expected. But at the same time, we've got this enthusiasm we're seeing in the battery metal space, which is built on, I guess, some sort of future demand within that particular area. How do you marry up what's going on economically at the moment with what's going on within the battery metal space?
Well, quite a lot of saber rattling by the Chinese government and certain Chinese government officials, but not followed through by massive action from them. Yes, they have sold some metal out of state reserve stockpiles, but it's been relatively small scale sales. They are worried and concerned about small and medium scale enterprises where the margins are much lower, and they're trying to keep margins healthy particularly with the tightening of credit that we saw some months ago. In fact, actually, we've seen a little bit of loosening of the fiscal regime in the last few weeks, so that's quite positive. There's quite a lot of moving parts. I don't really think the Chinese are going to try and control commodity markets. I think what they've done is taken out some of the excessive exuberance from speculation that was largely driven by Chinese speculators, particularly when it came to iron ore. But as we've seen, they've pulled back on hydropower availability to aluminium smelters, for example, and also to ferroalloy producers and to one or two other elements to steelworks. And really that power is being diverted to higher value-added industries. And presumably there's a little bit of a shortage of power. And I think they're trying to cut back a bit on the amount of coal that they're using to clean up their skies and create a healthier environment for everybody, particularly as we advance to the Winter Olympics. And although they are some months away next year, I think they're kind of pulling the levers of governance that they have and just preparing themselves for those clear sky policies that they'll bring in when the Olympics come to, or the Winter Olympics come to town.
Before we went live to camera in this interview, you and I were talking about some of the economic data we've seen out overnight in China, retail sales particularly. And you were talking about how you see this being associated potentially with the automaking sector. Now, we've seen the automakers pull back production. We're told that they are finding it difficult to source semiconductors. Tell us how you connect the dots between the weak retail sales numbers in China and what's happening in the auto sector, and tie in this idea about battery metals and so forth, because there is a dynamic going on here. I think it's worth thinking about.
Yeah, so we saw retail sales pull back in China to 2.5% growth. So let's not forget there's still growth, although what that is against 8.5% growth year on year in July. But I think a lot of this is down to consumers not wanting to buy diesel cars, and in some cases not wanting to buy gasoline cars. And that's a big element of retail sales figures. Really, most people that I know say their next car is going to be electric. If they're forced to buy another car, they're going to go secondhand, which is driving secondhand vehicle prices higher. And so what we're seeing is this delay to auto sales, and the automotive manufacturers are saying that their production lines have slowed down because they can't get the semiconductor chips. And I'm not sure I buy that argument anymore. I think this is because the demand simply isn't there, and they're not trying to frighten the market. They're just saying, oh, we can't get the chips. But I'm not seeing headlines saying you can't buy PlayStations and other units that use high performance computer chips. So I think a certain amount of this is really down to consumer behavior, saying let's defer the buying of a new vehicle until there's a bigger range of electric cars available. And certainly that's what I'm going to do, and that's what other people I know want to do.
And of course, with us all waiting until the opportunity to buy something, not just the fact that we're waiting for mass production, I know also the fact that with mass production comes lower prices. And I don't know about you, but I'm certainly looking for something that I can buy that's less expensive than some of those cars that are on offer. And the other thing I'm concerned about is buying a car that only does 300 miles on a charge. And I noticed actually from your early morning report to clients and those that do take your report this morning, there's a Chinese automaker, BYD, that's promising something like around about 1,000 kilometers on a charge. What's that? 700 miles or something on a charge, which would beat pretty much every single battery that is produced in the West for auto vehicles. Do you think that China is readying itself to swamp the West with not just batteries, but electric vehicles themselves? And of course, the big question is whether or not those will actually be within current regulations on batteries, because there's a lot of that going on as well. How do you see the market developing?
Well, you're right to mention the regulatory side of things, because we've already seen China try to make it difficult for Tesla to sell cars, according to the rules and regulations on fire safety and things like that, and the amount of power in a battery pack. BYD is a leading manufacturer of electric vehicles in China, no doubt about that. And if they say they can get to 1,000 kilometers on a battery pack, I'm sure they can. I mean, one way to do it is to improve the performance of capacity of the batteries in that pack, or just sell a bigger battery pack. Tesla has made similar claims as well, and I think this range anxiety that people have been worried about with electric vehicles is going to go away fairly quickly. So certainly in the next few years, as the performance of the batteries gets better and as the prices come down and we get used to buying bigger battery packs. So I think, yes, combination of technology improvements, greater sales, all going to benefit consumers. But I don't think electric vehicles are going to be particularly cheap going forwards. I think they are going to be or attract premium prices, partly because the quality of the ride is so good, partly because the cost of running an electric vehicle is going to be so much lower, and the maintenance costs should also be lower. We're going to see lower maintenance costs, better reliability. And that's all good from a consumer perspective, but they're going to want to charge us more for that. I'm sure of it.
Yeah. Just before we leave you, John, just wanted to reference, if I can, the price of copper. Currently trading at what, 94, just below the 9,500 level on the London Metals Exchange. We've spoken about this before, and when it passed the 10,000 level, you said, yep, good, fine, target met, but don't expect it to be a clear ride up from there. You were talking then, I think, about a rocky ride. Why is it that the likes of copper is not following up some of these other battery metals prices? Because the copper sort of argument, if you like, all links in with this idea that we're all going to be using electricity an awful lot more, and we're going to be demanding more electricity to be sent around the country. And the only way you can do that is by having bigger, thicker, heavier duty copper wiring. You've mentioned this before, but copper doesn't seem to be keeping up with other battery metals prices. Why is that? How long are we going to have to wait before we see 10,000 plus again and a sustained climb in prices of copper?
I think the market is getting used to this sort of level of copper prices. The Chinese government sees it as a bit of an inflationary threat. They saw it as a threat to these small and medium-sized enterprises, and that it was going to create more inflation within the system. But they didn't work that hard to knock the copper price back. I think they're sitting on quite a lot of copper metal within their state reserves. They've used a little bit of it to try and depress prices, but it's been more about the rhetoric than the actual action. And yes, I do think copper will find a sustained level over $10,000 a ton, and it's coming, because what we know from talking to the technical teams at larger manufacturers is that they always seem to have to put more copper into the cabling than you would theoretically expect. So if you think back to the planning a few years ago, they would plan for copper cables of a certain size, and now they've actually been running around with these cars and testing them out. They realize that they need to double up on the, shall we say, the tonnage of copper going into those vehicles in order to make them reliable and robust, so that they're not coming back in recalls, because there's nothing more expensive to an automotive manufacturer than having a recall on a number of levels. So, and I think we will see this also for the wind farms and other electrical kit that's being built around the world that is so copper consumptive.
Okay, John, thanks so much indeed for catching up with us. It's a pleasure once again. John Meyer from SP Angel, talking there about some of the current stories in the mining sector. For more videos from us here at IGTV, join us on Twitter at IGCom, Instagram, and subscribe to our YouTube channel.